Well, DeepSeek stunned the world and made headlines earlier this year when it released its AI chatbot, rivaling that of OpenAI's models at a fraction of the cost. Meanwhile, you've got robots from Unitree out of Hangzhou running EV factories. From AI to cutting-edge robotics to EVs, it's very clear that China's startups are working overtime to really close the gap with the US and dominate the technologies of the future. We've got a great panel here, and I want to chat with them about all of these developments. Now, Yuan, let me start with you. Venture capital investments into Chinese-based companies last year, as well as the last couple of years, have been falling. You're one of the biggest Chinese angel investors there. What do you see as, the most exciting development? I mean, has DeepSeek really sparked this frenzy in terms of AI and finding the next DeepSeek there?
Yeah, I think, DeepSeek is a very special case. This is that they actually never took any venture funding. It started as a side project of an entrepreneur who did quant trading himself. So it's not really, it wasn't a commercial project to start with, and we're obviously not investors in DeepSeek. But I think we did notice from DeepSeek that there are started to be very genuine innovations in both the very foundational model layer as well as application layer in the venture scene. And I think it did boost the overall confidence in the entire entrepreneur community in China in building something that is world class.
That's great. And I want to talk to you, Will, about BAI Capital. I mean, obviously, you guys started as an investment arm of German media conglomerate Bertelsmann, and of course now have a portfolio of more than 200 tech companies there. When you look at the tech space over the next 18 months, what are the most exciting, places where there's unlocked potential? What are you guys specifically looking at, especially as it comes into AI?
Yeah, I think the post-DeepSeek moment and also the reasoning models give opportunities for especially AI applications. And we see developers in China are really, I think they are really advantageous in developing these apps and also ship it out to global market. Like what we have in China recently, we see a lot of general AI agent products and also vertical AI agent products going on. So I think in the next 16, 18 months, we will see a very good group of new AI applications and also entrepreneurs going. One example here is if you look at the video, AI video generating apps right now in the global app store ranking, I think 3 or 4 out of 5 top ranked apps are from China, like Hailuo, like K.Oanh, Pixverse. So we already see these players battling in the global battleground and taking shares from what used to be like OpenAI and OpenAI related applications in the market. Yeah.
Great. Now, Esther, you're kind of the anomaly here in the panel in that you don't really invest in Chinese-based companies, but obviously AI companies globally are very important. I wonder if you can talk about your strategy of why overseas and not specifically Chinese companies.
Well, I mean, think about how long it takes a true deep tech company to be profitable, right? So Salesforce, it took Salesforce 10 years. It took Amazon 10 years. It took Uber over 10 years. It took Tesla, I don't know how many of you know this, but it took Tesla 17 years to be profitable. Now, any of these companies, they might have a hard time getting listed in China. Because as all of you know, like all of us here that deal with Chinese local market, realize that there is actually very strict listing rules. And behind that strict listing rules is a very strict also investment rules. So when you actually take money from, let's say, a local entity, usually government related, they actually would have a lot of criteria to come to it, such as you want to relocate your headquarters there, you want to put some research team there, you want to do certain criteria, and one of them usually is time to IPO. So that actually gives founders a little bit of mismatch incentive between how to grow a company versus how to make the company quickly commercialized. I mean, these two approaches, nothing wrong with it. It's just that companies in China are more encouraged to be having a faster commercialization path than outside of China. So now thinking about my investment, where I think AI can make the biggest investment impact. The investment impact, and I respect that people are investing in the application side, so AI agents and all those robots are fantastic. But I think the biggest impact would actually come from AI infrastructure, i.e. how we currently create the process of AI compute. The AI factory that we know today is actually dated, right? The reason that NVIDIA went up 30 times in 5 years is because GPU happened to be the right tools to train AI models. But now, 2025, we're at this pivotal year. For the first time in history, the compute used for inference, i.e. people that use this every day, versus the compute used for training is actually higher. So that means that there must be a better way to produce AI to meet the surging demand, right? Jensen Wang from NVIDIA said, the demand for inferencing is 1 billion times higher than training. So of course we need a new paradigm in how to do inference. So these companies might not get profitable in 5 years, 10 years, but I want to invest in these companies. So that's a very long-winded answer to say why I want to put some money outside of China.
Yeah. And outside of China, where specifically, is it mostly US that you guys are looking at?
Yeah, you have US, you have Japan, Singapore. So a lot of these innovation can come anywhere, right? But US is a very natural destination just because historically, US is a place with a lot of breadth and depth of different kind of VCs and PEs. So yeah, US would take on a good chunk of it.
Great. And of course, Tim, you invest in public companies. How are public companies thinking about when it comes to unlocking the AI potential there and the companies that you're investing particularly? I know chips is obviously a big part of that.
Yeah, chips are obviously a big part of that. I think in the past 2-3 years, if you look at public equities, a lot of these value creations were coming from the infrastructure side, which goes, up to natural gases, nuclear power turbine, and goes all the way down to how do you build a data center. You have to have connectivity, you have to have cooling, and also you need chips at the end. So I think in the past 2-3 years, it's about debottlenecking the entire supply chain to build the AI factory to make the models work. And I think, and if you look into that value creation process, a lot of that, predominantly a lot of that value creation come from public equities, public companies. And I think it's how it works in the previous technology revolution as well. But I think going forward, which is very interesting, as Esther mentioned, is that we're moving from training to inference. We're seeing token consumption on the inference side. Skyrocketed this year. So that creates an interesting angle to think about. If you look into the technology cycles, every technology cycle, it starts with the technology in the lab, in the university, and it's visible, and we invest a lot into the infrastructure. It was the PCs in the 80s, it was the internet, it was the Cisco in the 90s, and it was the towers, 3G in the 2010s, and now we're investing a lot into the data centers. But the value creation in the next phase, if we truly believe inference, I think it has to come from applications. We have to build real, we need to build real applications. We need to solve real problems, and we need to create real use cases. I think that's from our perspective going forward. The value creation. From my perspective, I look at public equities. I think the market breadth is going to be tremendous. Sorry to use that word, but I think we look at educations, we look at finance, we look at healthcare, we look at even gaming. We see a lot of public companies. They've been serving their clients, they're serving their users for multiple years. They have a lot of data, and now with AI, they started to be able to leverage AI, revamp their user experience, and create something new. So I think that value creation in the public equities are going to be very different from what we've seen in the past 2-3 years, which is, very narrowly focused into semiconductors and infrastructures.
Great. Will, what do you think in terms of apps? In what ways, are the apps leveraging AI, and
Yeah.
what's the most exciting stuff that you're seeing?
I think people recently are talking about one-man unicorn, and I think that's really, really possible. I asked like a couple of entrepreneurs I invested in, when do you think and where will that merge the one-man unicorn? And said it's like 1 or 2 years in e-commerce, in SaaS, and in social, and maybe one big KOL on Twitter or on Instagram can be that scale. Yesterday, I think last week, I met a founder, which is like a couple. They generate like 10 million revenue from selling stuff on Amazon this year, and they target to do 100 million US dollar sales next year, only still with a couple. And the lady is, and the wife is still taking care of the kids. So basically, they leverage AI agents to do all kind of like SKU development, sourcing, KOL reach outs, marketing, and also supply chain management with all kind of AI agents. The founder has 20 years of e-commerce experience, and he put all his know-how into orchestrating this the whole workflow. And his goal is to expand business without expanding hiring humans. So yeah, a couple running 100 million US dollar revenue, selling maybe 200, 300 SKUs on Amazon and TikTok. Next year, we will see this kind of business. And OPEX is like marginally zero, right? So it's only just feeding the couple and the child. So the margin will be high, and we'll see that kind of business emerging, not only in potentially like people easily to imagine SaaS, but also I think in e-commerce, in KOL, in gaming, we see that kind of things emerging recently. That's very promising.
Yeah, that's amazing, right? A couple
Yeah.
running it
Yeah.
probably. I mean, I guess that you could run it from your bedroom.
Yeah, they're not even doing arbitrage. They're not selling the SKU that Chinese manufacturers are not selling in US. They're just using AI to develop the SKU and also try to use AI to capture some of the long tail demand from the market that usually a human operator will easily neglect. So that's very interesting. Yeah.
That's great. Now, you guys ZhenFund recently invested in Manus, or reinvested in Manus as well. And most of that is of that work. I saw it on the YouTube. It was really cool in terms of what they were doing in terms of agents. I wonder if you could talk about that kind of growth and why Manus. Are there lots of other Manuses around that you guys are looking at?
Well, yeah, sure. I think almost every Chinese venture capital investor is looking at, say, a local team trying to build a second or third Manus, and they literally sometimes even do look the same. But my guess is if there is a second Manus, it wouldn't look like Manus. And Manus is actually a very interesting story in the sense that, so the founding team originated from China, but the product, not just Manus, but also the preceding product, Monica, was actually not even available in the China market. So from day one, for a team that has never been to the US, or I'm not even sure they've been out of the country at the time, were able to build a product that is used globally outside of China. And because they work with a lot of models, like say the US companies, OpenAI, Anthropic, and they do not provide service to the local market, like the US models. So the product is actually only available outside of China. So I think that's a very interesting phenomenon in the sense that these seasoned entrepreneurs who went through the very ferocious competition during the mobile era in China, that they're totally born and raised up in China, but were kind of self-educated with the US narrative. Like they grew up on Twitter in a sense. Since high school, they've been scanning Twitter and Reddit. They not just Manus founders, but also founders that we have backed in China, that they actually, their startup manual was Peter Thiel and Mark Andreessen's books. Right? And Paul Graham is like their god, basically. So they were able to experience the mobile era war, the competition, cutthroat competition in China, and at the same time be able to stay curious in exploring everything happening in the Silicon Valley. And I think as a result, the former experience, like the battlefield experience in competing in the local training ground in China, provide them with the capability to iterate really fast. But at the same time, they remain very educated and curious on all the new playbooks, like how to hire, how to scale, how to kind of explore new paradigms from the Valley world, right? So, and they hear the preachings from their kind of distant mentors in the Valley. So like I always joke about how Peter Thiel and Mark Andreessen have no idea like how many mentees they have in China. So I think it's very encouraging for us to see that such a local team can build such an international product, not just from the user base standpoint, but from like the product design, the aesthetics of the product. And so, yeah, I think we believe we will see more and more of such teams be able to build a product on a global audience. But at the same time, they do have to tackle a lot of geopolitical issues and try to avoid being the victim of the bigger debate they have no control over. So.
Yeah, we definitely want to talk about the geopolitical scene as well. I want to remind everyone, we've got a QR code up. We'd love to hear questions from you as well, so please use those QR codes and send us questions. I guess, Esther, I mean, that in some ways that's a perfect segue to you. I mean, we're talking about allocation of resources, we're talking about talent. I mean, you're looking obviously overseas, but a lot of these founders, and when we were talking just behind there in the prep room, a lot of these founders that you're focused on, I mean, they are Chinese, origin as well, right?
Yes, I think Manus is a perfect example of the best marriage of both worlds, right? Because I mean, what does it take to create AI itself? It needs 4 elements. It needs data, right? So data is publicly available. Same in China, same in US. You need algorithm. Algorithm is talent. So I mean, China is uniquely advantaged at this point because even look at China, even US AI scientists, half of them has Chinese origin. So we know that we are good with tech stuff, right? So that's number 2. Number 3 is the hardware, in which there is a lot of debate on that part happening. And the 4th one, and I think very important one, is the feedback loop, right? How can you iterate a product quickly? And that, in that sense, China has a very unique advantage because of the population is such a vast country, and people all have the propensity to try something new. So the testing feedback loop is really fast. The refining and the reiterate of a product is really fast. And if we can bring that along the talent and the product market fit that, let's say, refine in China to promote overseas, it's actually a very good marriage. To be fair, it's not an area that I invested in, but I just feel that this is a very good example of how 2 worlds can work together.
Right. We've talked about bottlenecks a little bit too, but Tim, I want to come back to you. I mean, what do you? Obviously, chips and data centers. I mean, these are the structural stuff is very important. What do you see as kind of the biggest bottlenecks for AI, and what are you looking at in terms of companies that can address that?
I think we look at that. I mean, which basically we're looking at 2 categories of companies. One is the companies that are building all these data centers, that the infrastructure guys. And we've been getting that question a lot about, I mean, China is underinvesting in AI because if you put all these numbers together, Alibaba, I mean, recently increased their capex, but if you look at that, I mean, they're spending about 20 billion a year in capex. Tencent is slightly below that. ByteDance is about 20 billion as well. And then you have some of the smaller guys, and if you add everything up, you get to about 60 to 70 billion annual capex. And if you look at US, last time we checked, I mean, it's 350 billion annual capex. So that is a huge gap. That's like a 1 to 5. But if you look into the data, I mean, 2 things. One is, very importantly, all the hyperscalers in the US, they're actually investing globally. So, I mean, their business is actually global. So it's not very fair to compare most of these Chinese companies versus their US peers. That's the first thing. And the second thing is, a lot of these capex in the US are going into training. And in China, one of the bottleneck was, I mean, we don't have access to the state-of-the-art chips, which I think gets, I mean, a little bit tricky for us to train the state-of-the-art model until I think DeepSeek came along. So the point I was trying to get is if you can find a way to efficiently train the state-of-the-art model, or if you have a business model that focuses solely on inference, not training because someone else has already trained the model and it's a good model, it's an open source model, it actually saves a lot of the prerequisite investment. So my argument is that from an investment perspective, I think that people have the willingness to invest, people actually have the balance sheet to invest. The number actually are, I think from our perspective, if you're investing 70 to 80 billion every year, focusing on inference, I think that's actually a good number. So the bottleneck is, and the other bottleneck in the U.S. we observe is power. Power is power is a very hot issue in the U.S. So and it's not such a big issue in China. So that's very interesting. So from our perspective, if you look at infrastructure, I think the biggest bottleneck is on chips. But the silver lining is, again, back to DeepSeek, if you have someone acting as a AI lab, train most of the models, and then open source to everyone, and then the question for everybody else is just to do inference. And the beauty of inference is that you don't need state-of-the-art chips. You can train. You can use some of the outdated chips to do inference. I mean, one of my friend working in these companies he was joking that if you're brave enough, everything can use. I mean, you can use everything as for inference. You can use CPU as inference. It's just it's a matter of cost. So we see the domestic alternatives like Huawei or Cambricon. Some of these companies, and they're actually offering very good alternative if you're using their chips for inference. But if you're building a large cluster like XAI, hundreds of thousands of chips to do training, my understanding is there are still bottlenecks. So that's the infrastructure category. On the applications, I think there is no bottleneck. I would argue that, from Chinese perspective, with the mature technology, if you want to build an application, leverage that technology to serve your user, that's actually something that China has been doing very good at. We have much more sophisticated engineers. By sheer population, engineers, product managers, those people were, I think, well-trained in the mobile internet age. So I think on that category, I'm actually very, very confident that, just to remind everybody, ChatGPT was launched in November 2022. And for the first year, you don't actually have very good product to say. All these cursor, all these Gling, all these other things, they started to ramp up last year. But we in China has only entered into the ChatGPT moment. If you consider DeepSeek as the ChatGPT moment of China, we've only been here for like 3-4 months. So I would argue people need to be a little bit patient on that.
Probably a little bit longer than 3-4 months, but
yeah. 4 months, yeah. 4 or 5 months for R1, yeah.
Is there, and I guess there will, in terms of the bottlenecks that you see and what Tim is talking about in terms of chips. If China still cannot get access to the highest, fastest NVIDIA chips, and obviously the US is saying that's not on the table, that's obviously something that they want to really protect. How do you see then, what advantages then do Chinese companies have in terms of developing?
Yeah, we see a lot of innovations from China that making those unaffordable service costs down. And like the example I threw out is the video generation. So I think right now there is an app called Pixverse that you can generate 5 seconds of video just using just 5 seconds. So and also it's free, and the company still has like 70-80% gross margin because they have a very strong cost-sensitive tactics to make everything affordable. And also for applications, I think right now in China, we see Yuan, Doubao, all kind of search-based chat apps, AI chat apps. It's already the MAU in aggregation is already 50% of the Baidu's volume. And also in terms of query, I think it's around 10 to 20% penetration. So AI search in China, in terms of MAU penetration, is already higher than that of OpenAI versus Google. And so, and also it's also free to everyone. And I don't think there's a burden on ByteDance right now in terms of offering this totally free to everyone. And also, I think in terms of application innovation, ByteDance, I think this year, the revenue and profit and also growth rate will outpace Meta. And the valuation of its stock is only 20-30% of the Meta's valuation. So in terms of investments, we see a lot of very affordable assets in China, very competitive, demonstrating very good P&L and also growth potential. And for us, it's really good time to invest. And what they are doing is shipping product at affordable price to mass adoption, which is a huge topic for AI in the future. So that's what I'm seeing right now. I don't see bottleneck. I think everybody is using brain smart enough to do everything based on aesthetics and also reasonable cost structure, not overspending into those data centers that may not in aggregate generate that revenue in the future for investors. So, yeah.
I mean, certainly lots of huge valuations. What do you think is a runway in terms of actually capitalizing on that and for companies like BAI, investment firms like BAI, what's a runway for cashing out?
For BAI?
Yeah.
Oh yeah, we recently had a new fund kicking off, and it's also kind of like very good fundraising progress. And also our existing ones still have 2 years. No, not really 2 years. We started at 2021, so yeah, it's 2031. So we still have lots to invest. And also this year, I tell my colleagues, like it feels like going back to 2013 when I was talking to Kuaishou, 500,000 DAU, 70 million valuation, super affordable, and micro data changed like the DAU rate from 7% to 15%. Su Hua joined the team, bringing all the algorithms. I feel like the same vibe right now, seeing a lot of applications with revenue ARR and also traffic ramping up. And we see a lot of like good entrepreneurs with super ambitious, and we see deals like under 100 million valuation. And Yuan just told me like average valuation they recently invested. You know, in terms of angel investment, is super affordable, less than 10 million. And we do have some very early stage 10 million valuation deals, very, very ambitious and also legit founders. So yeah, I think our bullets was prepared for more growth deals, but recently we invest a lot in early stage founders, and that's something similar to 2013, not 2021. Although some of the deals in AI right now is feeling like 2021 consumer sector in China, which is super expensive. But the overall average vibe is to support early stage entrepreneurs right now. Yeah.
And Yuan, in terms of what the prospects look like right now, is it expensive? Is it a good time to come in? I mean, what's your outlook in terms of the next 18 months and
Yeah, I was sharing with Will over lunch about the valuation number, which he did not disclose, but it was surprisingly low even for us. But I think part of the reason was that I think there was a bifurcation of the type of deals that investors are interested in nowadays, and there are superstar founders who are very proven in the past, and I think when they come out to do a startup, it's very pricey. And then there are the other set of, say, very young founders, usually first-time founders, sometimes if they're even in school, and it takes some courage for investors to make a bet on those people. And I think in the mobile era, when there was a more prosperous market, there were more investors investing in such more, like, say, I would say audacious bets, but into more green founders, but I think less so these days, because investors, even venture capital investors who are supposed to take risk, they have more kind of flight to security mindset, and they're more betting towards superstar proven founders. And we do those type of founders too, but then we continue to bet the very young founders who start building companies very early, and I think we face much less competition than before, and as a result, for this group of founders, it's a much lower valuation when we're entering. So we think it's great to take an off-beaten path and make contrarian bets, and I think hopefully the courage to bet those green founders will pay off.
Great. Esther, I think, let me see if I can ask you this. We've got a question from the crowd here. With Chinese tech becoming more prevalent on the world stage, what further role can Hong Kong play aside from the standard benefits of the city, such as low taxes, connectivity, et cetera?
You leave me the hard one. Okay, so yeah, I think the previous speaker, I don't remember his name, he's saying that every time when he comes back to Hong Kong, he feels like he's going back to a museum. There are some elements of truth in it, right? Because Hong Kong, despite the fact that we have a very well-structured legal framework and a very, very free capital market, the adaptation of tech is pretty darn slow. Let's face it, right? I mean, we still pay our taxis mostly by cash, right? I mean, we don't do a lot of things that is taken for granted in the greater part of China. But you know what Hong Kong really does have, I found quite precious and close to my heart. As some of you probably know, I'm one of the earliest members of SenseTime. SenseTime is a Hong Kong first-grown AI unicorn, and is founded by one of the professors at Chinese University of Hong Kong. So among the world's top universities and research institutes that study AI, in fact, Hong Kong, all 5 universities in there. So what Hong Kong has is a lot of AI and related talents. What Hong Kong does not have is after you nurture those talents, how do you incubate them? and how to help them to go to the next level. Because I used to be the judge for Hong Kong AI Lab, which is a organization between the government, the Science Park, and SenseTime and Alibaba. So every time when I look at these applicants, right, from Hong Kong universities, I feel like, yes, this idea is fantastic, but there's no testing ground for these ideas. So at the end of the day, I see either these ideas die because it's a student project, or for the very, very few that survive, a lot of them actually went to Shenzhen, right? Because the market is significantly bigger. And remember what I say, it takes 4 things to create AI. The last, and I think the most important thing, is the feedback loop. In Hong Kong, if there is so many regulations, the implementation is difficult, the feedback loop becomes really long and inefficient. And I think that's one unique benefit that China has. And Hong Kong should take more advantage of the access to China and to more access to the Greater Bay Area resources so that we don't waste these talents that's being incubated in Hong Kong.
And I think talent is obviously such a huge issue as well. And I know in the prep room, you guys were duking it out because
fighting about it.
Yes, fighting about it. You'll have to tell us, somebody stole somebody's
She accused us
out
of
there?
stealing an intern from her.
You guys did, okay?
Which we have not confirmed yet.
Yes, you guys did.
We'll look into it.
So not because, because of geopolitics, and I'm sure you guys are well tuned with this, but I mean, we do see a trend of a lot of these super smart Chinese AI students that from US universities that come back to, say, Hong Kong, China, or back to Asia in general. So we have these amazing kids from Carnegie Mellon. She interned at Meta and interned at NVIDIA. And she's supposed to be our summer intern.
You're making it really hard for her.
So she signed with me, and then after she signed, she said, "I'm so sorry. I got approached by another nameless VC that they want to go." And then so why is that? Because because interestingly, related to your last question, you know why? Because she said there's not much going on in Hong Kong. More going on in her case is Shanghai. More going on in Shanghai. Again, going back to
So it wasn't because you offered way more money to your intern?
That was a accusal. I don't think that was the case though. We have a big intern class, so I don't know what attracted her, the intern, but it could be the camaraderie between the interns. I don't know, but
no. But to be fair, we do see a lot more people like the Chinese talents in the U.S. incubated there and then coming back to China, to Hong Kong, in recent months especially. So that's been a trend.
Now, do you guys think that might be accelerated now at this moment? Because obviously the Trump administration has been talking about limiting student visas, targeting Chinese students in STEM as well. I mean, have we already started to see reverse migration? Are people calling you up for jobs?
Yes, I'm really in gratitude to what the chaos he created. Market that's really pushing a lot of Chinese talents finally clarify in their mind that staying in US is not an option, and really going back to, I think post DeepSeek moment we had our AGM with all our LPs. It's the first time in the last 3 years that really most of our foreign LPs came to Shanghai and try to understand what's DeepSeek and going on and understand the portfolio there. And they just like looking at the new, it feel like they're looking at the new land, like non-familiar new land, that, the fundamentals are really good and the talents are really impressive. And so, so we have 2 trends, right? One trend is Chinese founders going abroad, setting up entities in Singapore, and also trying to go to US. We have several portfolios, founders base themselves into Silicon Valley, talk to the Silicon Valley funds, and trying to make it a global company or pretend to be a US company. But also we have a lot of talents coming back from US, especially US university graduates. Yep. And they're not going to UK for sure, and they're going back. So that's a good sign, and we are really happy to invest in those talents right now.
Right. Well, we only have less than a minute left, but I do want to throw to all of you one question, since I'm also interested. What, in your mind, is the most exciting use of AI that you're dreaming about, that you're looking to invest in? Any kind of crazy, wild ideas out there?
Go ahead.
Yuan, you want to start?
start with the venture guys.
Oh, but we never have a premeditated thesis on thematic, like say products or a sector. So we're more founder focused. So I guess we're pretty taking from the founder perspective. So what we're saying is that founders we're looking at are younger and younger these days. So today actually there was a great company. Unfortunately, we're not an investor of Esther 360 that just went public. Just had an amazing IPO. And I think 10 years ago, the founder was like the famous batch post-90s founders, like founders who are born after 1990. So we're like seeing a lot of founders these days like that are born after 2000. So the post-2000s founders, and sometimes we're like, oh, this is not even young enough. Like we're looking for founders at like say 17-year-old, right, when they're just about to enter college, things like that. So because all the technology is so new, everyone's kind of forced to the same even starting ground. And I think the founders they start to get their say computer science education younger and younger. So we're just saying they start to be able to build something when they're say like 12, 13 or something. All right, just like the classic generation of founders like Jobs or Zuckerberg in the U.S. So we're starting to see these kids being able to have the capacity and resource to explore something purely out of curiosity and to start building. And so we're just really interested to see what is the future, who is the future, say, prodigy founder there where we can bet. So I think that's our perspective instead of a product that we can envision.
Yeah. And you, Esther?
So for me, I'm a little bit biased because I don't invest in applications. So I don't back in one-man billion-dollar company. I do a lot of AI infra, and I do believe that the most exciting thing is happening on how to reimagine how AI is being created. There are many ways that AI can be created significantly more efficiently. So one of the ways of thinking is how to make the data center itself more efficient, because data center takes 12 months approval from the government. You have to buy the land, you have to build a building, and once you build a building, 50% of your electricity bill went to cooling. That is absurd, okay? So we are actually backing a company that builds data center in space, because in space, solar energy is free, of course, 99% efficiency versus 13%, and you don't have to pay the government, you don't have to worry about building, and guess what? Space is minus 250 degrees. So you don't have to worry about radiation cooling, super effective, so you don't have to worry about cooling either. So that is happening, it's not science fiction. We're gonna have a first launch in August with SpaceX, so I'm super excited. So that's one of them. Another example is how to make compute itself more efficient. Because all the compute that we know right now is based on transformer-based token calculation, okay? However, I'm a mom, okay? My daughter can look at the dog twice and know that the third dog is a dog. However, the same computer would take a look at literally 1,000 pictures of a dog to realize that 1,001 picture is a dog. Why is that? Your brain is a lot more intuitive than a GPU. So the future, how to make this compute more efficient is you should be biocomputing. The data center will have the silicon-based chips along with biocomputing chips. So I'm also very happy to say that we are one of the earliest backer of the world's first neurocomputer. Wow. So you use your brain neuron to make a CPU. Now, this is not science fiction. I'm very happy to say that the company has actually commercialized. So they've been getting significant interest. We've been getting calls nonstop, literally nonstop, from drug companies, from robotic companies, and actually from universities around the world. So I think that we have to rethink how to create AI. And this is what my company is focusing on. So we're incubating these companies to rethink AI production.
That does truly sound like science fiction.
Yeah.
Tim, can you beat that?
Yeah, well, I can't. I'm a public equity guy. I'm very short-sighted, unfortunately. Dream case of AI, maybe AI become a very good investment analyst, so these guys don't kill each other, try to fight for interns.
She's welcome to intern here.
She will regret it.
Joke aside, I think I don't have a specific case of, like dream AI use case, because if you listen to everybody talk about the big pictures of AI, it's about AGI, and AGI essentially is do everything for you, and eventually you don't need human in the loop. So what worries about me, or I mean, what intrigues me is if you listen to all the AI pitches, I think 99% of the AI pitches in public equities or in private equities, in venture, people were talking about saving time and saving money. It's all about efficiency. It's all about getting all the fat, out of the system. So if you look at M7, you look at, I was checking the data this morning, and my analyst sent me. If you look at the recruiting data for undergrad student in computer science, they started to have a very difficult time to find a job in the U.S. So, something that I actually wanted to see in AI is that, again, if you look into the technology revolutions, every cycle, it starts as a efficiency tool. Personal computer, ENIAC, stuff like that. Everything starts as productivity tool. And what really happened in the process is that we created a machine or created a technology that actually help us not only save time, but also help us somehow, kill time, help us somehow keep us occupied. Imagine if one coder with Cursor can code like 50 developers previously, then what happened to the other 49 developers? That they have to do something. So I think
Will may have.
Yeah, Will may have.
Will may have somebody.
I don't have the answer yet, but that's something that I keep in mind.
That's great. Well, what about you? What's the most exciting?
Yeah, we are more consumer facing. So maybe next month you will see one of our portfolio company launching an AR glass that can record the 8 hours, 10 hours your day, and also help you to record audioly, and also understand the context, help you summarize, and help you track your well-being by understanding what you're seeing and or your audience is seeing. Although it's very privacy sensitive, but actually it's really going to, this is like it's going to record your life and help you memorize everything. So that's the AI glass. And another example is we see a company that building, so whenever you have an idea, want to build something, you just type in whatever you want to build, and they will generate a 3D model for you and ship it to you in a physical way.
Wow.
And so that's a very, very personalized e-commerce platform that it can ship everything you design from your mind. And lastly, I think the personalization will be huge in the future in AI. I think for time killing, we are seeing a case that they will generate cartoon and also video by just scrolling the screen, and it's not TikTok like one man creates something and millions look at it. It's like everybody's looking at everything differently just by prompting to the model and generates the content that you're looking at in a very instant way when the cost of AI inferencing is really going down, and everybody will see different cartoon, different image, different news, and different videos on the same app generated by AI.
That's amazing.
Yeah.
So from personalization to AI in space, we have lots to look forward to. Thank you so much for your time.
Thank you.